Okay, good. I think we are live now. All right, guys. Welcome. Super, excited. Super excited. Super excited about what is happening. And quickly, I want to walk you guys through how this week has been for me. Um, for this week, lately I've been doing a couple of withdrawals. Yes, today I did some withdrawals today. Not quite long. It's nine. Did some withdrawals. Let's see, made some withdrawals today. So we doing a couple of withdrawals lately. Doing a couple of withdrawals lately. Yep, doing a couple of withdrawals lately on the reef and so far so good. This week I have actually been paying attention to couple of pairs, um, especially this particular pairs crash 1000, jump 10, jump 50, which is one of the pair I'm waiting to actually take entry for. Then I think 75 also jump 75. Lately I've been paying too much attention on these pairs, unlike the volatility pairs. So I've been falling in love with these pairs lately. So let me quickly do an overview of why I've been spending so much time like paying attention to this one because a lot of things are changing in the synthetic market and Deriv, which is the broker that actually controls the algorithm behind the synthetic market. I've been making a lot of adjustments. They've been making a lot of algorithmic adjustments. So the market has been um, authenticating a lot of strategies. I mean, strategies, all the strategies that worked last year, this year. You have to like pay attention to the changes and also refine them. So, quick one. For those of us that are just joining this live section, I will do well to ensure that I go live every single day. Every single day. Yes, every single day to yeah, just to share my trading ideas, trading strategies, some of the strategies I've implemented that has helped me done a couple of withdrawals of recent. Um, I'm not claiming to be um not claiming to be a profitable trader, but I'm a trader who has at least withdrawn uh, good money from the market. So yeah, so at least I know something that works. I've been trading since 2023. but specifically the synthetic market. I started trading synthetic market in 2024. So just 2 years into the synthetic market, and I've really learned a lot. So quickly, let me just do an overview of the analysis of why I am paying attention to some of these pairs and what I'm learning from some of the changes I'm seeing in these pairs. Um, if you go down to 24 hours, you'd see that price in itself has actually reached this swing high, which has actually taken out this protected high here. This is 24 hours candle, right? And you and I know that price either trend upwards or trend downwards, right? And maybe if there is a consolidation, which is like an accumulation stage before an expansion. So those are the three ways the market moves. It moves upward or it moves downward. Then consolidation, market accumulates. But because this market, this particular market is driven by algorithm, so there are no real time supply and demand. Yes, so there are no real time supply and demand. So they are all controlled by algorithms. In as much as the market respects price action, but you also want to ensure that you play alongside the the cryptographic algorithm that is controlling this particular market because there's no real supply, there's no real demand, so you really cannot predict the market. So you can see price has taken out this top high, which is a sign of liquidity grab. Here you can see price has to like sweep out this liquidity on a 24 hours time frame, which automatically means that once price and swept this zone, price it tends to actually want to move downwards. Price tends to move downwards. So if we move to the 4 hour time frame, you would see clearly that price is been a change of direction here. Let me clear this all this let me clear all this so that we can you see that there's a change of direction. I will explain what I did here. So you can see price is currently in our POI. This is the 24-hour POI. POI is this zone where the this break happened, right? So the POI, which is our point of interest, is one of the zones where price will definitely react based on some basic principles like liquidity, um, break of structure, uh, sometimes fair value gap, sometimes other blocks, right? So this synthetic market also works with some of these principles in as much as this market is not a real market. So there are no real demands and there are no real supply, right? So, but nonetheless, the market may mix some of these, some of these, it may mix some of these elements, right? So you can see, you can see price here is giving us these 4 hours, right? Price is already giving us like a strong one of my confluences for validating entry or validating a new trend is a strong displacement. A strong displacement. So we can see a strong sell displacement is already occurring here, right? How did I know that? So I know that because one, let me delete this. Let's be clearer. I know that because one, if you come down a little bit to the 1 hour so I do it more clearer, you would notice that you would notice that price has broken this structure, which is more like a major structure, right? You can see price has broken the structure, it's a major higher time frame structure to validate this selling strength. So there's a strong displacement, sell displacement after price going to actually grab this sell side liquidity, right? This sell side liquidity here. So there's a strong sell displacement, which is part of what you want to check or look out for to validate your entries, right? Until you see a strong candlestick displacement, either a buy displacement or a sell displacement, that market or that movement is not validated yet. You want to ensure that you see a strong displacement. So the strong displacement are not necessarily on the higher time frame, but sometimes if you want to take on the swing trade, it's very important that you actually wait for higher time frame, at least the 1 hour candlestick market structure is being broken. So structure is being broken on the 1 hour time frame here. So you could see that this major zone is broken. Price came back to test it and push downwards, right? And you could see ever since then, price continued to build structure to the downside. You can see this structure to the downside. Here, structure to the downside. Okay, let me see if we're still live. We're still live. Okay, to the downside. Yeah. Okay, so now you could see that price continued to break structure to the downside. Now this validates a sell trend, right? You see a downtrend, this validates a downtrend. So, and for someone who's a swing trader, doesn't wait for for price to push this down for you to enter, right? You must have monitored this zone, which is like the 1 hour force structure, which is like a major structure for this particular trade, for this particular pair. After this price broke this structure and pushed up, test, pushed down, come back here again and still push down. You just know that okay, this is it. This is it, right? So that is happening for now for this particular market. If I want to take trades, I'll only be looking out for a sell trade, right? In as much as I know that okay, I cannot even take any entry on this trade yet, but because I'm late and I'm looking at the current market and price action, the risk is high. The chances that if you take any entry now, you might likely get stopped out, right? So this is my overview. So I continue to like watch Crash 1000. So let's go to the next pair. Next pair is jump 10. The same thing also. Consider some of these trades. I actually marked out the POI before they started moving, right? Because I already understood that POI, one of the most valid POI is always you can always pay the most valid POI around liquidity. See the liquidity here. Let me show you guys. Spotted out liquidity here. I knew price would definitely react at that zone. So 1 hour, mind you, 1 hour. If you really want to, personally for me, I think the 1 hour is where I get the most clarity in terms of top analysis. 1 hour gives me that clarity. So you will see on this side, you see spotted out liquidity here. Let me push down a bit so that you can see it. Sweep of liquidity. No, that is what I look out for. The market again and again and again and again and again. Look out for liquidity sweep. So you'd see here, right? Let me see push down. Yes, go to 15. We'll see it clearly with this sweep, and you'd see, yep, a sweep of liquidity here, sweep of liquidity. So that you make use of this sweep here, or any of the sweep, honest, but I'll prefer this one. Alright, so this sweep here, sweep of liquidity. What validates this sweep of liquidity is a break of structure, right? Price break of structure. Then these are inducements. What validates this inducement? How do we know this is an inducement? We use our Fibonacci tool and draw to this low, to this very low. You see that it validates that, and for a for a correct inducement, a validated inducement price, the inducement must be between 50 or higher than 50% of a Fibonacci. It must be between 50 or higher than 50%. That's for the sell side inducement. For the buy side inducement, it must be lower than or equal to 50. It must be lower or equal to 50. For the sell side liquidity, must be equal or higher than 50%. So 50% of this Fibonacci is actually the middle, right? This middle, this 0.5 is 50% Fibonacci. You can see that it's higher, right? It's higher. Why someone will say, okay, why didn't we use this as inducement? If you push, bring it to this place, it actually works as an inducement, right? You can actually use this zone as an inducement. Can you see? So either of the zones you use, but preferably if I would use the one of this particular zone, this particular zone, right? And that's what I use for higher time frame actually, not this for lower time frame. This is the stupidity sweep. I'm looking at like this from the higher time frame, and you could see that price go to that zone. I don't know how I marked it. You see price go to that zone, even do you understand? Even broke even broke out of the zone. You see? Now the market is designed to deal with those who are impatient and at the same time fall within the stop loss, fall within uh, the early entries, those who stop loss are around side. So can you see this pressure pushed up, pushed up to wipe out all of those people, grab all of the liquidity, push down, price push down. You could see that price push down here. Now, one would think that, oh, this is valid. Why is this invalid? Let me mark it right. Let me mark it right. Why is this invalid? Why is this move downwards invalid? This move downwards. Why is it invalid? It's very important to pay attention because you feel like, oh, I want to take sniper entry. Now, synthetics can be very, very delicate, require a lot of mastery to be able to take sniper entry. And at the same time, you want to look out for fake moves. Synthetic is a master of fake moves. This zone, price has pushed and liquidated all the stop losses, right? And one will be like, okay, yes, price is reversing. Yeah, this is time for us to move. Well, when I was still in my early days of still learning how to trade the synthetic market, I would have taken, I mean, moves like this took out my account several times. Moves like this can be very deceptive. If I thought you want to take this move, have a short, take it for just for a short time and out. Maybe you're looking for one to two, one to three. Do you understand? Take it for a short time and out and leave. Don't hold, don't say you want to hold it for you cry. So you can see that this particular move now was it's looking legit, right? But you notice that this is a fake out. This move is a fake move. In fact, this move is creating new liquidity for the market to have some for the market to grab before the main move. And now, how do I validate that this move is fake? Why? Because this move did not break structure. In fact, whenever you want to validate um, a reversal, maybe market reversal, right? Maybe a major trend reversal. If price does not break structure, this is the last structure that price created before it moved up. You could see here, this is that structure. Price did not break this particular structure. This, you see it there. Price didn't come to break because you can see this is the high, this is the low, right? So this high here is what created this low. This low here is what created this high. So before price pushed up. So price did not get here. And the market makers, they know these things, right? They pay attention to the distance between this this zone where structure is going to break and where they have to reverse. It's calculated. So they will they will push the market downwards so that new traders, amateur traders, or impatient traders who feel the market is moving, fear of missing out, they jump in, and boom, you will see that the candles that they set around these zones are very strategic. They design them that way to liquidate these smaller accounts, right? You see, boom, liquidate it, boom, liquidate it, push back down again, and started moving up. Now, this zone, this movement, this particular movement that you're seeing here, this particular movement you're seeing here, it's called liquidity grab. It's called liquidity grab. Price is trying to liquidate everyone who has entered this zone, enter at this zone, right? Liquidate them. You could see that price liquidated it completely. You can see, take it out, even if it's by 1 week, even if it's by a week, right? Price will ensure it takes it out. So you want to pay attention to early moves. In fact, you want to pay at multiple early moves, right? You could see this is a POI. This is when price first got into our POI here. Yeah, early sellers jumping at this zone. At this zone, early sellers jumping. See price got into. So the fact that price got into our POI does not mean that oh it's time to sell. No. Early sellers will jump in. You see price it as though it's pushing down, pushed up, right? Continue to bring structure upward. Continue to bring structure upward. So one, from year to year, you want to really pay a lot of attention. So what I do personally, I pay attention, pay a lot of attention, especially when it is pay a lot of attention to these zones, pay a lot of attention to that zones, especially when it's a trend reversal trade. And trend reversal trade are the best trade to take whenever you want to swing the market. Trend reversal, major trend reversal, not just especially a trend reversal on a higher time frame, right? So this particular trade is a trend reversal on a higher time frame where price has already gotten to oversold. Price has oversold. Now it's not time to for them to what buy. Price has gotten to price has overbought. It's now time for them to what sell. So that's it. Then you see price broke. By the time the remove started, one of the things you will notice about this remove is that the sell power is consistent in terms of the candlesticks, right? You see here, there's a mixture of buy, sell, buy, sell. You understand? So Yeah, you see, very clean, right? Very, very. So all of these um elements that I pointed out are very key to knowing how and when to enter the market, especially this structural break. If price does not break it, if you don't see a strong displacement to the downside, a strong displacement, a strong sell displacement. If it's on the buyer side, a strong buy displacement, right? So a strong sell displacement that must break structure. Structure must be broken. Then see price will test it. Then you want to now position yourself and go in full margin if you have the risk appetite for it, right? And you could see that price ever since then has been pushing. I mean, increase this thing, you could see price ever since then has been pushing, right? Has been pushing. And the goal for price is one of the things you want to pay attention is that for synthetic market, price moves from one liquidity grab to another liquidity grab on the higher time frame. So you see how price has been moving from one zone to the other. See, so swing high, swing low, right? So you know that okay, this is where price is coming to. Price may do a lot of shakara before it gets here. Yep. So quick on guys, I'll quickly pause this live so that this video will be short while I go live again so I can give a brief analysis of this particular trade that I'm about to take.